You're listening to the Pharmacy Podcast Network. Since 2009, the Pharmacy Podcast has been leading podcast publications as the insider voice of the pharmacy industry. Explore the profession and business of pharmacy through audio. Join us at pharmacypodcast.com or subscribe on Apple Podcasts, Spotify, Google, or any of your favorite podcast directories.
The business of pharmacy would do better to understand that success is about delivering better health to our patients. For this reason, all pharmacy organizations should develop a persistent spirit of servant leadership and leverage intelligent technology to maximize better outcomes. This is the RX Safe podcast series brought to you by the Pharmacy Podcast Network. RX Safe has unwavering core values, which guide everything they do every day. They believe in the importance of people above all other aspects of business and aspire to ensure their customers are 100% satisfied. This podcast series is about challenging conventional wisdom, upending the status quo, and developing technology that will define the future of the pharmacy industry. This is the RX Safe podcast series. Learn more at rxsafe.com/podcasts.
Hey there, Pharmacy Podcast Nation. We are excited to be back with the RX Safe client presentation. It's become an annual thing. It's a celebration of how we've done throughout the year in pharmacy. And it's a time where we need expertise to talk to us about what's happening at the end of the year as pharmacy owners. So one of those things is a subject that I keep admitting, and I'm going to admit to you again, Scotty, that I should not be talking about anything to do with business taxes because that is not my forte. I deserve to be out there talking about what pharmacists are doing and the role of pharmacy changing in technology, but I look for the experts to bring us expertise on what is the business of pharmacy. And this is an important review of what's happening at the end of the year as small business owners, important considerations for the end of the year. Tax planning. This is the time of year where all of you pharmacy owners start thinking, is there any way that I could save some additional money? End of year tax planning and also the strategy. And we brought some strategists with us today for section 179, describing especially how appealing that can be because of small businesses having the ability to deduct the full purchase price of equipment, of software for the end of year tax abilities and strategies. Having that equipment be immediately means that you can actually start earning a profit and keep your working capital healthy if purchased with a loan or a lease. Returning to this discussion is the one and only Scotty Sykes, CPA with the Sykes accounting group. And you are saturating in the business of pharmacy, Scotty. So I want to welcome you back. It's so fun to be here with you again. I can't believe how fast this year has gone by.
It goes by fast, I'll tell you. But Todd, thank you so much for having us. It's a pleasure always to be on the Pharmacy Podcast Network with you and your listeners. And it's tax time. Here we are. It's tax planning season. We're gearing up, running numbers all day, every day for our pharmacy clients. And so we're happy to dive into it.
We're also welcoming back Bonnie Bond, also CPA with the Sykes team. Bonnie, it was so much fun working with you last time. Welcome back to the show, and I can't wait to dig into this subject with you.
Yeah, it's such a fun subject. And like Scotty said, we're doing it. This is what we're doing day in, day out right now during this time of year. Figuring this out for our clients, seeing where they stand and what they can do to save money before then to December 31st. So right around the corner.
The reason why it's fun for you, Bonnie, is you're a big nerd, and I'm going to shout you out. And I'm a big nerd because I'm a fanboy of pharmacists, and I want to introduce our next nerd. And this is a big PharmD nerd. He's one of my favorite, Dr. Ken Tai. He has been on the Pharmacy Podcast Network so many different times, bringing us in enlightening us with things that are actually happening in the trenches for what is community pharmacy ownership and how he has blown up and expanded his business, 986 pharmacies in the beautiful West Coast. Dr. Tai, it is so fun to have you back. And I want to shout you out because you won an amazing award just recently. And I don't want to pull back. It's like wrapping Christmas presents. I don't want to talk to I want you to share with us about that honor and about that award. And you're the star of the show today. So Ken, take it away.
Well, with that intro, now I feel like it's only going to go downhill. But hey, you know what? Again, it was a pleasure to be on this podcast once again. I love this podcast. So Todd, thank you for welcoming me back. And of course, great meeting you, Bonnie and Scotty. I think this will be fun. We're talking about taxes and money and savings and everything else. That's kind of music to all independent pharmacy owners' ears. And, going back a little bit to what Todd was talking about, a little humbling, but I recently got awarded by NCPA, the National Community Pharmacists Association's Independent Pharmacist of the Year Award. So I honestly never expected it, but it was a huge honor. I'm very excited to be recognized by fellow colleagues. It was very special. I had my family there, and it was great. Recognition. I think more so for my team and for the 96 family, because whenever you get recognized for something, it's never the work of yourself. It's always the work of the team and everybody that you've gone into the quote unquote trenches with. Yeah. And so it was great. I mean, having been a pharmacist for over 20 years now and 17 years in the business, it does feel really good to be in a position where, you just think that what you've done is meaningful to the communities that you serve. So
a great honor.
You're very
Congratulations.
modest.
Yeah.
You're very modest and you're just that's the way that you are, Ken. You're a servant leader, and I look up to you. I look the way that you treat your patients, your employees, the empowerment that you give to your employees. When I see you walk through conferences and you have your posse with you, the 986, squad, they are excited to be there. They're excited to be around you. They're excited. And you can't buy that. You can't make that up, where you have people that work for you every day, and we can all get sick of each other if we're spending that much time together. And your team loves being around you because you guys are honestly like a family. And I think that it kind of plays into the truth of what is community pharmacy. That's not only internal to our staff, but it's external in the way that you feel about your community. So I'm glad you're here.
Thank you so much. Again, appreciate always hanging out with you. I learned so much from you because you are like the sponge that absorbs all this energy from all these leaders within our profession, and you get to share it with the rest of the country. And just great. It's always a pleasure for me, and it's always an honor for me to hang out with you and with all your guests, because they totally bring something different that I can learn about every single time. And of course, today we're talking about, cool stuff like technology and using that as a tax savings credit. So
tax.
Extremely exciting.
So cool.
At this time of the year.
I'm excited. So I'm going to kick us off. I'm going to come back to Ken because, like I said, you're star of the show. So we really want to dig into what it's like to have this opportunity to save money for your business so you can apply that money to something else to help your pharmacy grow. But I need to kick it back to Scotty. I need you to set the stage for us, Scotty, and tell us what is Section 179 as a refresher, if you haven't heard of that on this show today.
Sure. So Section 179, the short of it is, if you buy a piece of equipment or technology that's considered a capital asset, generally that capital asset goes on your balance sheet as an asset. And then the IRS will allow you in the tax code, or Congress in the tax code, allow you to write that asset off over a period of time. So it can be 3 years, 5 years, 15 years. If it's a building, 39 years. And what Section 179 does is it allows you, pharmacy owner, to write off that equipment 100% in the year it is put into use. So it's designed to encourage investment in technology, encourage investment in equipment to get that write off in the current year versus spreading it out over several years. So 179 is a very powerful tool from a tax planning perspective. And you also have what doesn't get as much attention is the bonus depreciation, Section 168K, which is very similar to Section 179, but there's some differences that hopefully we can maybe chime into later in the podcast here, but both of those essentially allow 100% write-off. But again, there's some differences on taking advantage of those.
Bonnie, before I jump to Ken, because I want to dig in, because I like the setting of the stage from the both of you and Scotty, because you kind of like give us that evidence-based approach to setting up what is this tax savings, what can this do for my business. But Bonnie, you gave a really good example of an actual case, numbers that you used. So, for example, a community pharmacy purchased or financed $165,000 worth of an RX Safe Rapid Pack in 2022. So use that as a scenario. I'm a brand new pharmacy owner, or I'm not a brand new pharmacy. I'm a pharmacy owner. I bought this equipment. Take me down the path of what happens.
So maybe let's just pretend that you have $165,000 of projected net income for the year. So to make it math easy for all of us, you could essentially purchase a piece of equipment. So in this example, maybe an RX Safe that's $165,000, and have the ability to go ahead and write that off, as Scotty mentioned, in this first year, if it's put in service before the end of the year, and deduct it immediately. So that would bring your income down to zero, taxable income to zero in that very easy scenario. One thing to note, what we love about it, I know many people ask us, well, what's the difference it's going to be the same amount of depreciation if I do it over 5 years, 7 years. And that's correct. It is the same amount of money. But what we're looking at, especially in a pharmacy, is the benefit of, increasing cash flow. So you always want to do everything you can, in our opinion, as you move year after year, is to open up cash is king. To have as much cash flow as you can available for your pharmacy to do what you need to do in your store. So accelerating that depreciation, not paying tax on that money in that first year is key. One of the first things that we want to make sure people understand, especially when you look at a large robot purchase, let's say, when we say it has to be in service before the end of the year, it has to be able, in your store, you're able to fill one script with it. And in a robot example, you should be in good shape in that scenario. But just merely maybe placing an order, if it's not there by 12/31, you're not going to be able to take advantage of this depreciation that we're talking about. So just keep that in mind. You don't have to have paid for it. So, you just place the order, it's there and it's in service, and you haven't even made a payment on it yet. Yep. Still take that deduction, but it's just got to be in service.
I get a lot of questions on, what kind of tax savings if I buy this robot, what's it going to look like for tax savings? I always just tell folks, find that bracket maybe you're going to fall in. And then usually a lot of pharmacies are in that top bracket, and federal and state maybe around 40%. So if you buy a $100,000 robot, you're looking at $40,000 of tax savings, so that's kind of the rough way of doing that.
Okay. So Ken, what was that first year that you started utilizing, or you had utilized the Section 179 tax savings? Can you kind of go into that for our pharmacy owner listeners?
I think this was a while ago, actually. I think this is probably, if I remember correctly, I started my business about 17 years ago, and I would say that probably within the first 3 or 4 years or 2 years or so, we already bought our first, couple of equipments, and then ultimately it just kept on going and escalating from there. And I, of course, being new to the business world back then, I was shocked that something like this existed. I was like, what? I mean, if I made $100,000, I could buy a $50,000 equipment, essentially write off half of my income and pay, essentially, quite honestly, half the taxes. It was something that I didn't even know was available until, because, you don't think about these type of things until you go into business, and then your accountant starts, and then of course your accountants out there start telling you, hey, there's opportunities there. If you're really growing the business and you want, and more important than the savings is also, featuring technology that can help you improve operations efficiency and the ability to improve the business as a whole. I think that probably is more important than even the tax savings, as far as I'm concerned, because ultimately, the equipments that we use, they're able to, quite honestly, change the dynamics of the operation. And I think that that's the key thing that I take away from it. And so the tax incentives and the savings is just a bonus, like a cherry on or icing on top of the cake for me. I was able to deploy my staff to do other things, including better patient care, better customer service, instead of doing more mundane things like putting stuff like a bottle or meds into another bottle, things like that. I really feel that automation can really play a huge part in helping us to streamline our day-to-day operation. It just makes the whole entire work environment better too, because now they're doing things that are a lot more enjoyable, that are much more meaningful to them.
And if I could just add, Ken, you bring up a great point. We're seeing so many of our clients that are dealing with staffing issues in their communities, and keeping good people on staff and people, especially for a good wage that's fair for them and fair for the pharmacy. And so this is a way we're seeing a lot of our clients, with these robots and some of this technology, is to it could be more efficient and effective to have those things in place and allow, like you just mentioned, it's fantastic. Some of your better employees, move them to other areas of the pharmacy that they can be of more benefit. And so that's where technology is just huge that we're seeing in pharmacy these days.
And actually, funny you said my first piece talked about technology, because RxSafe, I think when they first launched, I think we're one of the few first pharmacies to actually have them on board. And I still remember driving down to San Diego and looking at their first piece of sort of prototype equipment, and then ultimately putting it into our independent pharmacy. And it was really exciting because, I think they were looking to really get into the independent pharmacy marketplace. And then we were able to collaborate and get that, going. And so it was really exciting, and to be able to, learn about new equipments and their ability to kind of revolutionize our, our place in the, kind of pharmacy, evolving world of pharmacy. So, and you're right. I mean, staff is hard to come by these days, and to have a better working condition for them to do things that they want to do, and to supplement that with technology, which, let's be upfront, works 365 days a year, does not take vacations, no holidays.
Maybe a sick day every once in a while.
Yeah, there are a few, but I will say this, for the most part, there are pretty good sort of support, so that the downtime typically is not as bad. It's not as bad, as you would imagine. And I will say this, I mean, no equipment is perfect. And so there are certain things that you need to do to keep up and maintain, those equipments. And so it does require a little bit of, interaction and support from your own staff, as well as from the maintenance team. But I'd say overall, I mean, I think I have a lot of my stores are probably about 80% automated, and they use actually not just one piece of equipment, but multiple equipments. And so these are all things that I think are great. And I think when you say that, I'm assuming that, and I'm not, of course, a tax expert, but I've done so much of this that, there's also vehicles, right, that can be utilized for these credits, and computer equipment, software. Obviously, these huge equipments are very important, because they're much higher in cost, which allows for much higher tax savings. So it all goes hand in hand. But there's just so many different ways that you can look at this and maximize the opportunities that are out there by the government to help small businesses like ourselves grow, to give us a platform to have a slight advantage in being more efficient and be more competitive. So, whenever there's an advantage as a business owner, you take it, you run with it, and you just milk it, So I'm just glad that we have a forum like this to talk about it, so that we can share this with the rest of our community.
Absolutely. Scotty, give us some guidelines around this, these tax savings, and kind of like the engine under the hood of this system. Kind of expand kind of what Ken was talking about. What qualifies, what equipments, is it software? What about depreciation and equipment? So give us kind of the guidelines.
Sure. So I agree with Ken 100% here. As pharmacies require more of their services outside of filling scripts, I mean, you need to add technology. You need to add these automation tools to your pharmacy equipment. And so take advantage of the tax law to do that while it's here. But for Section 179, really, software counts, computer equipment counts, robotics count, some improvements can count in that 100% write-off. And when you start getting into some improvements and even looking at your building, that's where Section 179 and bonus depreciation can play a huge tax planning role. When you think in terms of a building, if you own the pharmacy building, let's say it's a $500,000 building, you have to write that off over 39 years, which is a very long time. But if you do what they call a cost segregation study, for example, that takes that building and breaks it down into individual components, the cabinets, the plumbing, the electrical, the floors, and each of those individual components goes into these different depreciation buckets, which then allow you to use Section 179 bonus depreciation to get 100% write-off. And so you can take a $500,000 building depreciated over 39 years, and maybe you're able to depreciate $300,000 of that building in 1 year because it's falling into the buckets of 179 and 168 eligibility. So you're talking huge tax savings if you own your building and your pharmacy, for example. So, that's really where 179 is going to come into play. But again, really all equipment's going to qualify. Vehicles is a big one. Obviously, we hear about a lot. The IRS, actually, Congress wants you to buy those heavy vehicles over 6,000 pounds. Mm-hmm. The SUVs, the trucks, the vans, those will allow you for 100% write-off. Vehicles under 6,000 pounds are limited with Section 179. So if you're thinking of any vehicles, consider those larger 6,000 pound SUVs, believe it or not, from a tax perspective.
Business use vehicles.
Yeah, it's got to be business use. Everything's got to be put in use. It's got to be business use.
Absolutely.
It does not have to be paid for.
Ken has to cancel. He has to cancel that limousine that he was thinking of buying.
To take him back in front of his home.
It was 5,980 pounds only. So I have to.
We've seen RVs during COVID. We had RVs with COVID shots going around. We've seen airplanes. We've seen Porsches. I wouldn't go with the Porsche. The IRS is going to question that all day.
Stick out a little.
But vehicles can be definitely take advantage of it for sure.
So Bonnie, I'm thinking about clients that they were profitable and they owe tax. Are you recommending that they kind of consider this tax advantage for 2022?
It's an interesting question you asked. We get that a lot. People, we have calls and video conferences with our clients about their tax planning, and they love to say, what can I buy? Do I need to buy anything? And we talk about this a lot. Economics comes first. So we would never want to advise someone to just go buy something to buy something. So cash, again, is king. It's if you need it. Obviously, if it's something maybe you may not need, let's say you're going to need it in February and it's November,
yep,
and it makes sense to save because it's something you're going to buy, then let's go ahead and do that. But so it really all boils down to that. We have lots of clients we talk to, and we say, do you have anything you need to buy? You've got all this net income, and they'll look at you and say, we're good,
Another point I want to bring up, though, Bonnie, is sometimes we see pharmacies with maybe a break-even year. They've already done some tax planning to reduce that net income, but they do need that robot. Right. And so they're like, well, can I create a loss? Can I use 179 to create a loss? So Section 179 has limits on creating losses, whereas bonus depreciation does not. So that's in a scenario where you might say, all right, well, let's look at the 100% write-off with the bonus depreciation and create a loss, carry that loss to our 1040 individual income tax return and use it to offset our income from other sources, W-2 or whatever. So, that's where it starts to get into some planning areas. But if you have net income, break even, or just a little bit, you can still take advantage of these tools to maybe even create a loss, which is, again, can be powerful tax planning for a tax planner.
Yeah, I don't want to put you on the spot, Ken, but you are kind of, like I said, star of the show, and that comes with good things and bad things, and I start becoming nevy. But just for example purposes, how much money did you save due to that Section 179 when you leveraged it and used it?
Well, are you talking about this year or at the time of the first purchase? I want to make sure I know the reference here.
Yeah, let's get the biggest one. We're a hopeful group here, so let's talk about like the time that you leveraged it and you saved the most money.
Wow. Okay, that's a very good question. I've never been asked this ever, but I do think that I would have to kind of think about this a little bit. I think this past year, or like last year, for example, I think we purchased somewhere close to about, I would say easily, just pieces of equipment, somewhere over about $2-3 million.
That's incredible.
Nice.
Overall our stores, and that's multiple different types of equipments at multiple different sites. We have a metric that we use, and literally every store that I have, there's pieces of equipment that I know we're going to need down the line. So I essentially build out a store with that in mind. So essentially that particular area will be left empty with the footprint of the actual equipment that I'm looking to buy and usually pretty familiar with. And then I would even have all the specs there in terms of the RJ45 plugs and the connection plugs, so that when I need it, I just have to pay for it and basically scooch it right in there, plug it in, and I'm ready to rock and roll. And so it's always been thought out and planned out in that methodical way. So as essentially when the time comes, especially at this time of the year, well, I'm trying to give it a little more leeway. So October, November, I make calls to all my guys and say, hey, I need stuff, guys. Can you make sure to get it delivered and installed prior to December 31st? And of course, they go cray-cray and they just start, let's get the orders in. And then they just start getting, all the ship dates ready to go so that I can get it in prior to. And I 100% agree with you, Bonnie. And that is the fact that I never buy stuff just for the sake of buying it. I think that's just not a very smart business decision. But you do have to plan and be ready for the next stages and growth and timelines of your business as they develop. And of course, there's a need. And plus, like I said, I look at the tax savings as just a huge bonus. And if I can time it right, then I can get the best of both worlds, right? And that's kind of how I see it. Usually it's not likely that I'll take it as a loss, but there are times when I might do that. But at the end of the day, usually if I'm at the stage where I need to buy equipment or I'm planning to buy equipment, I already know the trajectory of the company and I already know that I'll need it and it's going to help me build. It's going to help me obviously incur tax savings on top of it. So yeah, last year was huge. I probably utilized that tax savings to the max at every single location we had. And so I do know when I say that number, you're like, wait a minute, you kind of exceeded the number, but we have different entities and different corporations. Right. So you break it all up and it's quite honestly like endless how much you can save because you buy a piece of equipment, it's $100, $150, $200,000. And you slice it up over 4 or 6 different entities is nothing. You could easily write that off.
Bonnie, I'm thinking of, Ken's testimony as a business owner and the impact that this had on his business opens up opportunities to hire people. It opens up opportunities to implement a new marketing strategy. It opens up other things that have nothing to do with what it was intentionally used for at the time it was. So he's really giving us some major pros as to how to leverage Section 179 as a pharmacy owner. Let's talk about the cons, because you see everything. You're the Jedi Knight of tax savings. So and you're protecting our pharmacy owners. So talk to us about some of the cons of the 179 deduction.
So I would think the only really con that comes to mind, and Scotty may have something to add, we do see in some of our well-performing stores with, that higher net income that need those deductions. And so they, it is the same amount, but you are accelerating it with 179. So you come to a point, okay, so it's the next year and you have no other assets that you're depreciating anymore. So there's no depreciation expense. At some point, if you stop buying something, there's not going to be that expense, that deduction there. So Ken made a great point about just really understanding what your stores need. And this is the perfect time of year to do it, because you can't do it obviously in January or in February or March when your CPA calls you and says, oh, we owe all this tax. It's too late to buy something at that point. So it's really important to have your numbers in order. And that's what we preach to all of our clients. We've got to have everything at this time of year projected out pretty well to know exactly where you stand so that we can work with you to understand what we can do if we need to do anything, or maybe we don't, or maybe, like Scotty mentioned, there's things that if it's something you definitely need down the road, we can go ahead and create that loss and those sorts of things. But as far as a downside, that would be the only thing I could think of, is just that, you continue to accelerate. And so at some point, there's going to be a year there. If you don't buy something, there's not going to be that deduction isn't going to be there anymore.
Yeah, Bonnie, I love that point, because there's multiple stores that we've hit that point, right? I mean, most pharmacies are probably a 1,500, 2,000 square foot footprint, right? And there's only so much you can squeeze into that, size of a location, and you're going to run out. And so when you run out, it's kind of like, oh my God, what can I do? All of a sudden, I have these huge tax liabilities, and you have nothing to offset it. And it's a great problem to have. I mean, I'm not complaining. I mean, Jesus, I think
it's a good problem to have.
It's a great problem. But
well, Ken, you can just go buy another pharmacy. Then we can find some tax.
Yeah. I heard there's about some really large 6,000-pound Porsches too. So those are things I always look at to help.
He forgot to mention boats. We used to. I think we've seen a few boats over the years.
Yachts, airplanes. That's the next phase of the write-off sort of paradigm that I'm working on right now. No, but at least we jokingly say that, but the reality is it's true, because when you get used to something and it's so good, and you all of a sudden don't get it anymore because you've maxed it out, and you start running out of ideas on how we can quite frankly minimize those tax liabilities, it gets a little bit I guess you're not used to it, and then it gets a little stressful, because you're like, oh my God, this is what I need to really have to pay. So it just goes back to the testament that if you have an opportunity to do this, you got to take advantage of it, because it's a great thing. It's a great thing. And then when you don't get it anymore, you max it out. That's when you start like really missing it. And then, like you said, Scotty, the only other way is to continue to open pharmacies, because that's a huge loss to offset some of those gains. And that's that's a fortunate thing, because that's probably one of the huge propellers of my growth, because I need to constantly find losses to offset the gains so that I can, ride it out. As a matter of fact, it was interesting. I talked to a student of mine. There was a few years where I felt kind of like, oh, wow, I'm good. I'm happy. Things are good. And I stopped growing and building stores. And literally that time period, I suffered a lot of, tax issues, because all of a sudden I was like, wait a minute, there's nothing to write off these gains. What am I going to do? So I went back on the saddle and just went back to start building stores and growing stores. And then things were settled out again, because we can offset those gains, so very interesting. I mean, it's an interesting world.
Yeah, there's a lot you can do with a new pharmacy purchase with depreciation, for example. I mean, there's a lot you can do. There's a lot of planning opportunities. And I'll say, if you're a pharmacy owner out there and you're constantly facing the tax man and opening your wallet year after year, and you're searching for deductions, I mean, there's some things you could probably look further into. Retirement plan options, like high-powered retirement plan options, like pension plans, charity planning. So there's some high next level stuff you certainly should be looking at if you're in that position. But definitely 179 is that low hanging fruit. And I would say one of the cons I see, Todd, is the vehicles. Sometimes those smaller vehicles are limited, which can be a pain for a lot of pharmacy owners that do a lot of deliveries. And then next year, that bonus depreciation I was talking about goes to 80% right off, not 100%. So that's a change that's coming up. And if you're looking at that cost segregation study, if you own the building your pharmacy is in, you probably should take into consideration that change that's coming with the 80% bonus depreciation. And if you've owned that building for 10 years, for example, and you've never done the study, you can actually go back and run and get one of these cost segregation studies, for example, and play catch up on all the depreciation you missed, and then pick it all up in this current tax year, for example. I keep mentioning that cost segregation study because that is taking advantage of Section 179 and the bonus depreciation 100%. I mean, you're maxing that thing out. Yeah. So
I have a question, Scotty. So we're experiencing the dirty word that is happening in the United States, and that is inflation. And the money that we have right now in our disposal and the abilities to use it to run our businesses, it's stressed out because of this inflation. So is there I mean, you and I talked 1 year ago, almost to the day, about this in 2021. How about reflecting as a CPA, someone guiding our pharmacy owners, and thinking about the difference that we're facing today in our economy and what this economy is really like compared to last year? Should there be a little extra thought around this to get as much savings as possible based on inflation?
Well, absolutely. Inflation's somewhat like a tax. It's a tax on the consumer. So it's additional. You can look at it as additional tax on the consumer. So anything you can do to free up that cash flow in your pharmacy is going to be vital. And these things are very important that we've been talking about here. Not to mention the changes with DR fees coming down the road, where they're going to be all coming, what was it, January of 2024, you're going to have the retro and then at the point of sale. So you got to start thinking ahead here on building that cash flow, getting that current ratio to 2.5 to 1 or 3 to 1 if you can, and building that cushion in your pharmacy. This next year is going to be big, and how pharmacies are going to get there is really, as Ken was mentioning, not just filling scripts, but doing things outside the box in the pharmacy, nutraceuticals, supplements, testing, whatever it is to get that cash-based revenue, grow those margins, grow that bottom line, get cash in the door, stop relying on those third-party PBMs where you're not getting paid for 21, 30 days. This next year is going to be a big year. And with all of that being said, in addition to the inflation variable that's out there. So exactly. Anything you can do today is vital.
So I flipped this back on myself because as you were talking, Bonnie, I'm like, whoa, wait a second. I just dropped a tremendous amount of money into this studio. So I just thought, wow, 179 right up my alley. Like, I'm going to be able to experience this too. So, we're preparing for 2023 and content expansion for community pharmacy and our long-term care. And I'm thinking of that too. So Ken is interesting. He has 986 does several things that are focused on the markets and market opportunity around pharmacy. Obviously, he leads with his community pharmacies, but he also does some long-term care. Pharmacists are getting into specialty. Sometimes there's the 340B entities. Bonnie, tell us a little bit about if Ken decides to do another pharmacy that's not a community pharmacy, is this another way to leverage 179 in, say, 2023 and 2024?
Absolutely. I mean, any new, I should start by saying, I work with a lot of startups, so new stores. Again, like Scotty mentioned earlier, when you have 179 can be limited to income in a lot of cases. But there is still special depreciation out there. So with a lot of startups and new stores, there are a lot of deductions in those first years already available before you even get to depreciation to kind of keep things at break even. Or a lot of startups take 18 months to get profitable because of those things, tax deductions, I should say. Yeah. But in some scenarios, and probably with Ken, I get a feeling that he's pretty good at this. Those startups can go, quickly as far as growth and the ability to need more cash and to be profitable. And so those first years, it's great to be able to have this, to be able to take advantage of the Section 179 as well.
And Ken, as fast as you can start leveraging the technology to generate or save operational revenues or generate operational revenues, the faster the better. So what was your, what was your kind of ballpark estimate of value in developing and implementing and working into your workflow, the Rapid Pack, and then not the tax saving, but let's talk about the ability to generate profit off of that new pieces of equipment by leveraging it correctly. Share with our pharmacy owners what your experiences was with RxSafe?
Well, first and foremost, I mean, I think that we have multiple pieces of equipment from the RxSafe, and including what we call the Twin Towers, the dispensing machine and whatnot. And I think it's always a little bit. There's two folds. One, on the technology front, there's always staff that's a very I guess they're a little concerned about their job security when you bring on technology. And so there was a little bit of fear. I'm not going to lie about the fact that they feel insecure, and in the job market that's kind of up in the air. I think that's one aspect that we had to really train and educate our staff on. This is not meant to replace you; it's meant to deploy you. And I think that's a key word that I've used throughout this whole time frame as I initiated and started to implement technologies into our pharmacies. And then once they saw the effects of that, then they really loved it. I mean, it's one of those things where you don't know it till you try it. Once you try it, you can't live without it. And so once they got a chance to use it, they're no longer afraid of it. Everyone's always have a fear of the unknown. So once they got comfortable with it, and they understood that, hey, this helped me to get my work done faster, more accurately. There's patient safety concerns that were alleviated through this. And then they were able to spend that time now maybe talking to a patient, working with us on different initiatives to help grow the pharmacy, to create better workflow. Then they loved it, because now they're not doing the mundane things, and they're just like excited about a completely new sort of job description of what they can do. So, and then of course, from a overall workflow perspective, everyone started to understand the needs and the efficiency that were built into the equipment. So those are things that take a little bit of time, a lot of education, a lot of massaging between the owner and the pharmacist versus the staff, just to make sure they know that the intentions are never to get rid of them, but to put them in a better position to be successful in the jobs that they do. And I think it has definitely proven that. Because anyone that's walked into my pharmacy will know that it is not a pharmacy that's not well staffed. Let me just put it that way. I think there's a wrong sort of perception that, because I have a machine, then I walk into a pharmacy and it's just empty, right? That's not the case. Now, it might not be the case for everybody, but I can definitely speak on my own personal behalf. Our pharmacies are stacked. I have a pharmacy, my first pharmacy in El Monte, that has an RxSafe and has other pieces of equipment, an adjunct to the RxSafe, actually two pieces of RxSafe equipment. So it's stacked. It's about 80, I'd say minimally 80% automated. There is 40 plus staff members in a 1,500 square foot location. So you cannot tell me that that is not a well-staffed pharmacy. But yet all the filling and the prescription vial putting and all that stuff is automated. And so everyone's like, what the heck are you doing, Ken? Isn't the whole purpose to cut staff? No, I said, no, the whole purpose is to increase patient care and patient interaction time. I want there to be more interaction time between the patients that walk in, the ones that call us through the phone, whatever it is. And so they love what we do. They continue to come back. And yet that pharmacy is pumping out, 1,100, 1,500 prescriptions a day. So it's just amazing what technology can do to allow you to expand and grow, because I guarantee you there's no way in heck we can grow to that rate in that little small footprint without technology. And there's no way we can provide the type of patient care that we provide without the number of staff. So they're equally as important. And once they understand it, and once they see that, then they embrace it. They love it. It just continues. It just basically becomes an integral part of life. It's like a cell phone. Who can live without a cell phone? And then once exactly right. So once they have this equipment,
No.
I know, right? My old dial-up. A little rotary phone.
I'm going to have to steal that, Ken, the word deploy. Even in the accounting world, we have so much available now for automation and things to make things easier there on those first line kind of job options. And we've had some pushback from staff too. Is they feel the same way. They feel like you start using this program and then I'm out. And they're like, no, there's so much that we can now move you to do that's much more beneficial.
Yeah.
I want to see Ken's store. I want to visit this store.
Yeah,
I want to.
I want to go too.
That's amazing.
Sounds
I
like
invite you all to come
amazing.
out anytime. We have so many different operations, long-term care, like Todd talked about, our specialty, our little, even community pharmacies. Everyone comes in and they think it's either a bank or a meat market. As a matter of fact, our staff came in last week, and they could not even walk through our break room. I'm sorry, the lobby, because there's so many people there coming in for shots, coming in to pick up the prescription. He literally had to say, hey, he had to dodge people to try to get through. And he's like, oh my God, this is and he works for us, right? He's like, it was an adventure to get from that, 50-foot area, no, 100-foot area of the lobby into our pharmacy. And of course, once you get into the pharmacy, it's another story because there's 40 plus people inside that little area. So it's amazing, what technology can do. And by the way, I'm not happy about the fact that we're so squished. I'm really looking to expand and move to larger locations. But, it's one of those things where it's the beauty of growth, right? Once you're in the position and you're growing, when you first start a business, you want to have it kind of small to lower your risk because you don't want to pay all that rent and you're, of course, risk of failure. But once you do well, then it's like, Jesus, I don't have enough space. How can I expand? How can I grow? How can I buy buildings so that I can essentially do these studies to essentially write off all this gains? And it's exciting times. I think that one of the other messages that hopefully I'm sending out there is that there's opportunity in independent pharmacy, and there's hope
Absolutely.
out there. There's too much doom and gloom and people saying how life sucks and we can't do this, we can't do that. We're I would just be the first testament to tell you there's opportunity. You just have to be willing to work for it. You have to be open-minded. You can't go in there with just thinking that, hey, this is how the old way of things are done and it's not working. You have to go in there and be open. We're, as a small pharmacy group, one of the largest vaccinators of COVID in LA County, which is crazy. We think we did over 300,000 vaccinations for a county, which is, LA County is pretty big. We're one of the largest in LA County as an independent provider. I'm sure it might be even across the country. I don't know that, but I would say that we're pretty dang close. And it's just exciting. It just goes back to this whole premise that, when you utilize all the tools and all the opportunities available to you, whether it's through tax savings, through automation, through deployment of staff to do more patient care, that it really helps to build the business. So,
Absolutely.
I would 100% agree with Ken here on the opportunity in pharmacy. That open mindset is key. We see pharmacies all over the country with an open mind. They see that this is the biggest opportunity they've ever seen in pharmacy, being able to transform into healthcare centers of their communities. That is a great opportunity. How exciting is that if you're a pharmacy owner? It gets me excited. I'm not even there. So great.
We were having that exact conversation with some of our clients the other day that have really gone outside of the box. And that's what it's about. You're an independent pharmacy owner. You're not a big box chain down the street. So why are you different? And it's really about, in my opinion, becoming that wellness center. And I love what you said, Ken, about having staff that's available to have those conversations and be out front and do that. Because it's not about just picking up a script. It's about, this particular pharmacist was talking about, I can look at the script and see that this script is probably going to give them a headache or a stomach ache or whatever. And just being able to grab them when they come in to get that and say, hey, why don't you take some of this with you and maybe get some of this? And this is going to help what could possibly happen. It's just things you just don't think about. It's that service level, that wellness, that ability to have those conversations with staff is fantastic.
Well, I just want to ask one question. Bonnie, Scotty, are you guys sure you guys don't have an honorary PharmD somewhere? Because it sounds like a pharmacist.
We just talk to pharmacists
so
all day,
Yeah.
That's great.
I tell folks, I don't fill prescriptions. I'd kill somebody. No. You don't need to be doing the accounting in the back office.
See?
But it does make sense as being a patient. I've never walked in, and I go to an independent pharmacy. They're great. But they've never grabbed me and said, to look ahead and say, oh, I see what you're getting ready to start taking. That's going to be rough for this reason or that reason. Maybe think about this, that, or the other. Just as a small example, stepping outside of the box, doing, again, wellness, and having that relationship and that touch with that,
Actually,
clients.
it's so fun. We're talking about these write-offs, and actually, I didn't even think about this, but we started a new program. It's called RX 96 Hope, in which we're actually providing, essentially, it's a mobile clinics for the homeless. Yeah, I'm sure you've heard in California, there's quite a bit of the underserved and homeless population. And we're actually buying an RV, which again, I think is over 6,000 pounds, so that we can actually utilize and retrofit, so that they can actually go in and again retrofit, additional tax savings right there, so that we can actually go out there into the community and serve them and provide TB testing, COVID vaccinations, mental health screenings, even housing, maybe a referral assistance, and even might be connecting with different nonprofits to provide this care. And so again, you're doing things for the community, but then yet you're also able through these 179 Section 179 programs be able to maximize the tax savings to allow for these initiatives to occur. Because otherwise, it's really hard. Let's be very honest, right? Start the first 2 years, like you said, 18 years break even, or whatever that time period is. I usually just estimate 18 months to 24 months is the toughest. And I do know that most businesses fail in those 24 months because they cannot make it. Once they get over it, then life is actually okay. You can sort of wade the storm and make it work. But those first 24 months is very critical for the survival of the business. And I'm just very grateful that we have these type of offerings through our system that allows us to have a greater chance as a small business owner to be able to go out there and make it work. So.
Scotty, I actually have a question because you did this for us last year. So I kind of want to jump into this, and that is any of the changes that took place between, this time last year and now. And the reason why I ask that is because in our notes in preparing for the interview, we were talking about being negatively impacted by DIR fees that are expected to start, or kind of a new phase of them in 2024. Can you kind of provide some cash flow management ideas for our audience that feel that Section 179 may allow to diminish that cash requirements in 2023 for both income tax and then, of course, quarterly estimates?
Well, it kind of follows along the whole thing we've been saying here today. You taking advantage of the tax code is crucial because you're able to keep that cash in your bank account. And when we're talking about pharmacies, cash is king. I mean, you got to have it. So take advantage of these tax laws, do everything you can, get your financials in order. We have a strong fundamental belief here at Sykes and Company that you got to have your books in order. You got to have the foundations in place in the back office there. Then you can run these projections, run the tax plans, see what your options are, see what strategies you have, because we want to lower that tax liability as much as possible, because the government is your silent partner in your business. So we want to do everything we can from keeping the payout to your silent partner there, and build that cash flow in your pharmacy, whether you want to expand, whether you want to prepare or build up your balance sheet, the strength of your balance sheet, the strength of your liquidity in your pharmacy to deal with these DR fee changes or what's coming down the road. So, leveraging the tax law is going to allow you to hopefully play a little part in doing that.
Excellent.
And there hadn't really been any changes with depreciation laws.
Well, that's what I was going to. I have a follow-up question because you mentioned this again. The quick difference, the difference between Section 179 and that bonus depreciation.
Mm-hmm. The big difference is going to be how the states handle 179 versus bonus. States don't always follow federal.
Okay.
So
it makes our job really easy.
So
you take a deduction on federal, but you can't do it on the state.
So you got to know how your state, it might make sense where the state doesn't recognize, but $25,000 of 179, like here in North Carolina. So you have to add back, the rest of it. So bonus may be different. So you might want to take the bonus depreciation to get the 100% write-off for federal and state. Mm-hmm. So state differences is key. The write-off to create losses, if that's part of your planning, the write-off to create losses is a big key difference between 179 and bonus. But Yeah, and there's some other technical rules in there. Once you elect bonus, you kind of have to use bonus for all the other assets in the same bucket, if you will. But those would be the two major things, and the states often get overlooked. Make sure what's going on the state side is part of your planning as well, because again, some of those states don't recognize federal law.
So the savings is different for my state tax versus my federal tax.
It could certainly
Can be.
be. Oh yeah.
Bonnie, what is this? Give us some slight differentiations between the two.
What, the state and federal?
And for the tax savings too, the 179.
Well, he's just mentioning that, like his example, there's a state like with North Carolina, for example, they only allow 25,000.
Okay.
That's right, Scotty, right? For state.
Mhm.
So you might have taken 200,000 on your federal return. But
As
you would
a
have to
deduction.
add back as a deduction, but you would have to add back that difference on the state.
Okay.
So, I mean,
And-
it's just something you gotta know about.
The state,
And you're-
the state's not going to let you lose it, but they're going to say, all right, you got to add back, and then you deduct the add back over 5 years.
Yeah.
So you don't
Over a period
lose
of
it,
time.
but you got to think about these state things for sure.
That's what planning
That
is
also,
important.
well,
Yeah.
that also brings up the pass through into the election. We can start going down the tax planning rabbit hole here, but anyway, I'm not going to get down that hole.
I will make one comment, Scotty. I love how you said that IRS is our silent partner. I never really used the word partner with IRS, but
Like it or not, they are.
yeah, I know, right? Like it or not, he's your partner.
Yep.
The one that keeps
Taking my money.
The world's worst creditor.
Yeah, exactly. I actually, creditor is really what I usually call them.
So I'll bring up just one point. This is very elementary and easy, but something I thought about. We have a lot of questions a lot of time about leases. So sometimes you can get into maybe these big equipment purchases and you're offered a lease scenario. So that's different when it comes to depreciation, 179. Now, if it's a capital lease, which means you're going to own it, purchase it for $1 or whatever at the end of the process and it's yours forever, 179 depreciation, all of that is fine. But if it's an actual lease, those items that you're leasing, you don't get depreciation expense
Right.
on. Those are just written off each month. You pay that lease. That expense is each. If it's $500 a month, it's just a straight expense, lease expense.
It's a rent expense, so to speak. So yeah, you make sure you understand those leases.
Know what you got.
Because
Yeah.
a lot of times the interest rate's hidden in those leases. So you got to know what you're paying in terms of that, but also understand is it a capital lease where I can write off this whole piece of equipment now in this tax year, or is it written in terms of I'm renting this equipment and I'm only going to write off the expense that I'm paying every month. So if you're renting $100,000 piece of equipment, and you're not able to write it off because it's just a regular lease, you're going to not see that tax benefit by any means. So definitely understand those leases for sure. Good point, Bonnie.
Yeah, and actually, most of the equipments that we use are capital leases where it's a $1.
Most are.
Yeah.
So,
And that's another thing to think about when you're talking about cash is king and, increasing cash flow is, some of these capital leases definitely can be beneficial if the interest rate is fair. And we see some of them at very fair and low interest rates. Over time, if you're paying for it monthly over a certain period of time, that's another way to save some cash versus taking all that cash out of your bank account to pay for it up front.
Yeah, and that's the beauty of these capital leases. To be very honest with you, when I first learned of it, I was in disbelief. I was like, "What? I can write off the whole thing, but then I could pay this in 5 years."
Yep.
That was like a no brainer. I was like, "Oh my gosh, I'll do
You're just
that."
having the tax savings, and then you're also saving on that initial cash outlay isn't there. So
It's just amazing.
very beneficial.
And yeah, companies like RxSafe and a lot of automation pieces equipment companies, they are so good with understanding these tax laws in terms of how to make sure to make sure that you're going to max out the benefits of these equipments, both on a user perspective as well as on a tax perspective. And I've learned so much from them because I think they have folks like yourself that probably, customize and tailor their programs to check all these boxes, And so the good thing for me is I didn't have to think too much. I just had to kind of follow along and do what they sort of advise us to do. And when I cross-check it with my CPA and with my my CFO, they're like, yeah, oh my God, this is a no-brainer. You just go for it,
Yep.
So it's pretty cool. It's pretty cool. I mean, I think when you are able to maximize, what's available to you, and these are all things that I'm assuming that the government's encouraging you to do, because this just helps stimulate the economy, get people going, stimulate the manufacturing business. And a lot of this equipment, believe it or not, is actually made in the USA, because, I don't know if you're aware, but when it comes to caps and vials, not many countries do that anymore. We're one of the few countries, maybe outside of Canada, that still do this. A lot of other countries actually use a lot more blister packs and pouches and whatnot, which do use equipment, but it's just a little bit different. So.
Hey, I could talk to the three of you all day, but we are actually out of time. This has been absolutely amazing for us to get back together. Scotty, it is so nice to see you. We got to meet up more often.
Thank you, Todd.
Once a year. We got to see each other maybe at an upcoming conference. Ken, you and your tribe and your crew, the Pharmacy 986, you guys are rock stars. Keep doing what you're doing. Your patients need you. This community needs you. And I know that our pharmacy industry needs you. What you do for the CPHA, a shout out to the California Pharmacists Association. We love that association out there and what you guys are doing. Largest association in the country for a pharmacy association too. So the big guys. So we're excited about what's happening in pharmacy and community pharmacy. Check out rxsafe.com. Once again, go to rxsafe.com to learn more about this. And with that, I want to say goodbye to everybody. Thank you, Scotty. Thank you, Bonnie. And most of all, thank you, Ken, for what you do and for joining us today.
Thanks, Todd.
Thank you, Ken.
Everyone.
Thank you, guys.
everybody.
Bye-bye.
See you soon. See you next time.
Take care.